Morning and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'll be your host through today's trading journey. Now, having a look at the virus that we've been going around the world right now, COVID-19, we can see the numbers are continually increasing. We're now at over 150,000 infections and the death rate has touched just over 40,000 deaths so far. Now, we have seen a massive jump in New York with figures now encapsulating and being engrossing really what's going on, what's happened in Wuhan. So the figures are well above 80,000 just in New York in the US. But moving on from that, I do like to keep these updates coming to you about the virus because they are important, but we have other things to discuss today. Now, having a look at this chart, this is a GDP chart that I've sourced from Bloomberg, but more importantly, it shows the variations of different ways that there might be a recovery. Now, this kind of recovery has actually gone out the question. Economists are starting to question whether a V-shaped recovery is going to occur. And it's always been in my firm belief that it was never going to occur. And it's now good to see that we're seeing other economists start to feel the same thing. Now, if you actually look at this graph that I've got on the chart just behind me here, you can see the difference between each level of thing. The line that keeps on going dotted is what the expected GDP was meant to be. The other ones that are coming down was one of the early outbreak or the blue line, and then this is the latest curve that they're expecting. Now, I think that's also still going to be incorrect. I can't see that from this point forward in the second quarter of 2020 that we're just going to suddenly miraculously start recovering when we still haven't seen an end resolution to the virus. And the chances are we are actually going to see this occurring for a much longer period of time with lockdowns extended for much longer than we anticipate. So that is something to take into account, especially when it comes to this sort of virus and the chances of an economic recession. Now, moving on from that, I've also got a chart here that's really about all the rate cuts that we are seeing globally. Now, this is every country so far in 2020 that has cut their rates by a certain percentage points. And if not, then they've left their either policy changed a little bit, and the grey ones are ones that have left their policies untouched so far. Now, I am expecting this colourful map here to end up being much more colourful by the end of the year, but it is something to take note of. I mean, most of these countries have ended up being Western world sort of stuff to start off with, where they've had both quantitative easing and the interest rate cuts occurring throughout. Now, looking at a little bit more on this chart here, this is about the quantitative easing side of things. So we're seeing that quite a few countries have already started with their quantitative easing. We do expect to see more along the way, but this is just getting started. And we've got some countries labelled on here that are preparing to buy government bonds, and this is just one of the ways that they might do QE. So having a look at what countries that are actually doing bond purchase programs of some level is what we're really looking at on this chart here. Now, I do believe that we will see other more inventive ways of QE coming up, and that the central banks will be trying to find other ways to allocate funds and try and rebuild the economies quite quickly. And that might be doing through asset purchase programs such as the ones that we can see behind us here, but also stimulus packages like what Trump has been talking about. So, that is something to consider, especially when it comes to the actual economic outlook for the globe right now, and of course Australia and anywhere where you may be in the world. Looking at what is going on from both the central bank sort of the rate cut side and whether they're doing quantitative easing. But further than that, we can also have a look at the GDP. Now, this is the expectations on GDP just in that sort of Eurozone area. But the biggest one I can see there is a 10% drop is expected for the UK on GDP. And now that we've gone into that second quarter, we should be starting to see GDP figures become more news relevant. So this is just a little sample of what we're expecting to see. I imagine the US and Australia will actually see much bigger numbers than this. And Chinese numbers should hopefully be quite negative as well, which would generally mean that we're going to see a weakening economy across the globe for an extended period of time. And getting those GDP figures back up is not going to be an easy feat, especially when you have a global lockdown. Now, just to put that into a little bit more perspective, and what I mean by that, what we are having right now is a financial lockdown. And a financial lockdown can be a number of different things, but it's really defined by the ability for a household or a business be able to pay their debt. And the lockdown really comes from the idea that you may have let's say I'm the retail side of the debt, and I can't repay that mortgage. And then therefore all of a sudden the bank can't repay their debts to maybe the central bank or the IMF or something like that, because they have also defaulted on their mortgage because people like me have defaulted on theirs. So it keeps going up the chain, and we end up with this financial gridlock, if you will. Now, something that stood out to me a lot today, and I was reading a KPMG article and a couple of other articles along the way overnight, was that the US, 40% of the US is considered to be potentially in financial gridlock. And this comes from that we have most Americans living paycheck to paycheck, much like Australia, which has 46%, but that same principle in place. If they're living paycheck to paycheck and they get an unexpected bill, or they lose their source of income, then all of a sudden you get them being unable to make their repayments and whatever it may be, and then the domino effect occurs. And that's what we're starting to see right now. We're starting to hear a lot about government intervention and them trying to sort that out, but it's not going to be successful for everyone. And there are going to be people that are going to lose out, unfortunately. And as sad as that may be, it's just a part of the world right now. Now, having a bit further look at that idea of living paycheck to paycheck, we also have that unexpected bills. So if anyone is having those unexpected bills come up, $400 or more for the US, and from what we can see it's about the same figure here in Australia, then this is going to be problematic, and it is going to cause that domino effect to unravel all the way through the chain, especially if we start getting big numbers. So the first things that we'll be looking to see will be, will those credit card defaults start going up? Then will we see car defaults starting to occur, personal loan defaults, and a number of other variations of asset classes for borrowing, credit and debt. So let's keep an eye on some of those, because they will indicate a little bit more moving ahead as to how we're going to see a recovery occur, and if the economic situation globally is going to get worse. Now, having a little bit of a thinking as well, Trump has been speaking about this stimulus package, about $2 trillion worth of stimulus. Now, right now, he has had an announcement this morning that some businesses will be able to start applying for aid as of this Friday coming. So that will be interesting to see and where it's really going to go. But I know there has been a large amount of argument between Democrats and Republicans about where the money actually goes. And there has been a lot of controversy around some of the things that have gone on. Naturally, you wouldn't be Trump without a little bit of controversy. So at the meantime, it's still a little bit too hard to say what exactly is going to happen to that money and where exactly it's going to go. But I'm sure we'll find out eventually, and if there's a little bit of controversy to it, it'll be a little bit more exciting in the markets anyway. So let's hope we see some of that. Now, moving on, we've also got a little bit of news for you to keep an eye on, much like the Trump news, where we're trying to keep an eye and see what happens to that stimulus package. Now we're wanting to see the data from China about asymptomatic infections. So the chances are that they are going to be releasing information, and these are a part of a bit of a rumor mill, but according to what I've seen on the wire, we're expecting to see some data coming out of China about coronavirus and the amount of people that have tested positive but shown no symptoms whatsoever. Now, that's going to be important for being able to model current projections on how far this disease is really spreading. And that's going to be important for the long-term economy, but also to see how we might be able to fight the disease a little better, and if some of the efforts that we're doing right now are going to be effective or not. Now, to have a little bit more, today's news. There really is a number of different news events. They are all really low impact. The only one here, and we generally do see this during NFP week, that is going to be an important one for you to watch, is the ADP preliminary non-farm employment change, or NFP sort of results. Now, these always come out on Wednesday night at about 11 o'clock, and you do tend to see that once these results come out, because they have been accurate and pretty well accurate for a number of years now, you'll see pricing in of the news for NFP on Friday ahead of schedule, because they are basing it off these preliminary results. Now, I am interested to see if that's going to occur tonight. Now, because obviously we've had so much turmoil, markets have gone chop and changing, economies have changed drastically. Their expectations for an increase, I imagine, on the amount of unemployment claims going on and that sort of side of things, but I also anticipate that the NFP number is going to be far different. So we might see a little bit of change, and we might see that for a difference, the ADP results versus the actual NFP results may not match up. Now that'll be something that does move price a fair bit at NFP on Friday. But for now, let's have a look at these figures that are coming out tonight. So if there's anything today you want to get in contact with me about, you might want to send me an email just about anything that you've been doing on your own trading even. Feel free to send me an email at talktoal@acy.com. And of course, like and subscribe the video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.